Let me first ask your take on what the Fed should do here. We were talking with Jay Hatfield of Infrastructure Capital Partners. He said he thinks the Fed needs to be at 3% rather than 4.5% because these high mortgage rates are hurting the economy. What's your take?
There are several things hurting the housing market. It's not just interest rates. Supply is a big issue as well. So to go back to your question, I think this is a Fed that most likely will decide to stay put and wait for the new data to come in. We are at an important point of inflection. It's certainly true that real final sales have been moving somewhat lower. We also see that inflation-adjusted capital spending has been moving lower, not recessionary, but slower growth in these categories. I think the real test, however, comes in the second half of the year. So far, economic data top line has been extraordinarily noisy because all of the erratic discussion about what the new tariff policies will be. As we have more and more structure around that, I think companies can finally decide how much of the tariffs they're going to absorb, how much they'll pass on to consumers. And consumers thus far have shown some reluctance and some hesitancy. I'm watching those consumer spending numbers, but also what are businesses doing with regard to their new investment in capital equipment? And if that continues to slow in the second half of the year, that may be the point at which the Fed decides to step in.
So far this earnings season, you've seen many companies shrug off the impact of tariffs or report kind of marginal hits. Now, you note that the effective tariff rate might be much higher than people came into the year expecting, and higher than what a lot of Wall Street came into even this quarter expecting. Around the mid-teens, could get closer and closer to 20%. At what point does that make a real difference, Abby?
Sonali, great question, because it has been an expectations game thus far. Following the comments that were made by the White House in April, people are saying, whoa, 15 to 18%, not so bad. But let's put that in context. These are Smoot-Hawley level tariffs. And again, some of our most important trade partners, including Canada and Mexico, the numbers could be even higher. And so I am concerned that these are things that will be disruptive. Up to this point, many companies have, in fact, decided to absorb those tariffs. Some of that has been the companies outside the United States, some U.S. companies. But let's take a look at the most recent discussion, particularly in second half guidance, as companies here have reported their second quarter results. And we see companies like Procter & Gamble and Hershey and some of the pharmaceutical companies basically saying they're not going to be able to continue to absorb tariffs if they stay at the levels that are now suggested. But what we, of course, know is that those tariffs have been a moving target and they are being imposed in slow motion. And so I don't think we can assume that the data we have seen thus far tells us how companies will respond in the next few quarters.
Yeah, no, I'm seeing multi-billion-dollar hits at companies. Obviously, I follow the car industry very closely. But, Abby, we have a great screen on the Bloomberg that is fairly complicated, but it shows the effective tariff rate for each country with which we trade. I think it's incredible data. And the one point I will make is when you look at these numbers, very high, obviously China's up there at almost 50%. Mexico and Canada lower. Mexico at 4.3%, Canada at only 1.9%. But that's because this is calculated on total duties collected and the customs value of imports. So when you have these tariffs set fairly high, Abby, companies just don't import as much of that stuff. Right? So you get a lower effective rate. How much do you expect it to add to inflation once they stop, eating these costs in their margins or getting suppliers to give them a break?
Sure. Well, let's back up a little bit. I can answer your question very simply and say that people who've done the analysis believe that at the tariffs that have been announced thus far, we're talking about an increase in top line inflation of about 0.4%, which is not insignificant. But I think we make a mistake if we think it is a simple calculation. So, for example, Matt, you're so familiar with the auto industry. You know full well that a car that is manufactured, i.e., assembled in the United States, so much of the input and the parts that go into that vehicle are in fact coming from Canada, and in some cases Mexico. And so if we put a significant tariff on Canada, that in fact raises the price of what we view as domestic vehicles. And by the way, it's also input tariffs, for example, steel and other components.
Abby, I also want to get your view here on what's happening on a stock-by-stock basis, because I've seen you recently say you're taking a look at CyberArk Software. And interestingly enough, this morning we were out with the deal from Palo Alto Networks making an acquisition offer here. What role is M&A going to play in this market? And ultimately, what does it mean for investors?
The recommendation for CyberArk was done in January, and it was based on the idea that that was one company, for example, that offered some good idiosyncratic opportunity. The overall market is not inexpensive at this point. In fact, one could argue, based upon several measures, it is testing some valuation limits. However, you are right. I think that M&A activity will be significant. Keep in mind that many U.S. companies are very cash rich at this point. And they will be looking for strategic opportunities, that is, ways to enhance their own competitive stature. And I do think that there will be a pickup in M&A, and it won't be limited to technology. I believe that we will be seeing it in many different categories of the U.S. market. And the thing that is a little bit confusing right now are those cross-border transactions. Obviously, with changes happening more rapidly than we are accustomed to with regard to foreign exchange, that is something that may complicate things. Also, we need to look at the regulatory structure, whether the administration here will approve some of these cross-border transactions.